Meanwhile, earnings coming thick and fast, and plenty of them cutting their guidance. The market seems to shrug it off in the day. Malcolm Ethridge, Executive Vice President at CIC Wealth, with $850 million in assets under management, I'm pleased to say, is here to help digest the myriad of sort of signs and signals we get, whether it be the housing data looking painful, whether it has downgrades from the likes of IBM, Lockheed Martin, J&J. Are you positive or negative on this market?
I would say probably very cautious on this market. I wouldn't call it necessarily negative. I see days like today where the market starts to trade positively for no clear reason, especially on less than great news from corporate CEOs reporting earnings so far. I think what's happening is we're starting to see folks just assume that we hit peak bad news. I think similar to what you guys were alluding to in the opening, it's that all of the bad news that can be out there is now out there. And so when we start to hear CEOs coming out with tempered expectations, and it's mixed, right? Some are pretty good and some are Apple and IBM. And then you look at it and you go, well, okay, well, now I know everything. All the chips are on the table. And I think investors are starting to believe that they can start to work their way back into the markets and move some of that cash that went to the sidelines back to the markets, because at least we feel like we know most of what we're going to get hit with in the near future.
Malcolm, are there detailed indications that you would look for companies to indicate such a peak bad news? Are you looking at margins, top line, bottom line? How does the dollar feed into this? What are the specific indications that we've finally reached that peak?
Yeah, so I'll actually be looking for those revisions after earnings season is over, right? So if you think about the fact that Microsoft came out almost immediately after announcing Q1 last quarter and started talking about how the dollar was impacting them and the exchange rates having a negative impact on where they forecasted earnings, I think those kind of revisions are what we're likely to receive from CEOs immediately following Q2 earnings. But I would say if there is a lack of those revisions, that would actually be positive news, I think, which tells us that, again, all of the bad news that can be out there now suddenly is out there at the same time that interest rate hikes, that 75 basis points we recently got and the next 75 we anticipate getting, have also then had a chance to work their way through the system a little bit, since that's a sort of a lagging impact. And we can start to say in August, September, all right, maybe we really do have all of the information, we need going into the latter portion of this year, and we can make some adjustments and some bets on where we see opportunity coming in the close of the year.
Is there opportunity in a treasury yield that's giving you 3%?
I wouldn't necessarily be looking to go into treasuries just yet, simply because that flight to safety that I started off by talking about is the knee-jerk reaction trade, which means if you look today and say, oh, I can get 3% there and that risk-free rate of return, that doesn't necessarily mean that's what it's going to be 2 weeks from now, let's say, if there is some sort of news that comes out and changes your perspective on the markets. And so that correlation between the stock and the bond market that hasn't completely shaken itself just yet, where the stock market going down should mean good news for the bond market, but in recent history it really hasn't. Until that correlation breaks a little bit more, I wouldn't be so immediate to say, well, I'll at least jump into treasuries as a place to earn some yield, since I want to get out of cash and see some positive return.
What are you making of correlations across commodities, or lack thereof at the moment? Oil higher, metals more worried about some of the CEOs, the BHP bulletins, the Rio Tinto's warnings of growth uncertainty. Is there more room to run in that space?
Yeah, so the energy trade is an interesting one, because we looked at it and said, okay, oil went over $100 a barrel, and it's going to firmly stay over $100 a barrel, probably for the duration of this war between Russia and Ukraine, since, obviously one of the largest exporters, the largest exporter in Europe at least, is tied up in this whole conflict. And then all of a sudden, oil starts coming back below 100, and we go, well, wait a minute, what's the catalyst here? How do I actually catch that? The reality is it's tough to call, right? If a war happening in Europe and it being among one of the largest exporters of oil doesn't tell you that we're going to firmly stay above $100 a barrel as our threshold, and we're seeing gas prices at the pump now fell below $4.50 as a sticking point, it's really tough to look at that space and say, I can make a confident call if the traditional indicators that tell us what direction we should be leaning one way or another really haven't been all that predictive, over the last, call it 90 days or so.